This video is brought to you by FXCM. Open a $50,000 practice trading account by clicking the link below.
Well, let's think about today. What was going on, and how might we use this information? Not necessarily for just tomorrow's activities, but how do we start planning ahead? What are the things that we could be looking for in the near term for traders' reactions to some fairly significant news events today? So we had comments coming from Ben Bernanke, and they were particularly clear. In fact, so at one point he made the comment that interest rates were well positioned to promote moderate growth and price controls in the future. And so this provided investors with a bit of clarity in that investors shifted from anticipating no rate hikes or cuts in the future to a bias towards rate hikes in the future. So perhaps not by the next meeting, but in the intermediate term, we could see, even the meeting after next, we could see a quarter-point rate hike to fight inflation from the Fed. Well, this kind of clarity is useful, and initially it creates a little volatility, and then we start to see the trend begin to settle down a little bit. So what kinds of things could we look at to try to determine when the trend is likely to settle down? So I wanted to put this on as an amendment to, or a continuation of yesterday's daily video, where we were looking at the risk environment in general and how do we identify some breakout points, and not to get too excited about just one day does not make a trend, but what else could we be looking at to try to identify where and when the market's going to go? So this is the S&P 500 that we're looking at, if you couldn't tell already, and traders in the equity market were confirming what everybody else was thinking, and that is, if the Fed is making it sound like a rate hike in the future is more likely, it is very common for equity investors to push equities down because cost of doing business goes up with higher interest rates. So that's certainly one way to look at it. And you'll notice that we've been at this point once, twice, 3 times, 4, 5, 6, and 7 times in the last year. So 1380, this range, is a very this is a real inflection point. This is a point that the market has been bouncing down from and up from over and over again, and we are there right now. So one of the ways in which we can look at the risk environment here is just by looking at equities, which are considered a higher risk, higher yield asset, and therefore you can see kind of how traders feel about risk by looking at the equity indexes themselves. There's another way we can look at this as well. The VIX, which is an indicator that I use quite a bit, and I talk about it a lot because it is so useful, is a measure of options volatility, or implied volatility rather, on the S&P 500 index options. And it will rise as investors are getting really concerned about the market, and it falls when investors are becoming more confident. So you'll notice that we're, just like on the equities, we're sitting at a resistance level. We popped right up to that resistance level 21. We've been there twice already in the last month and a half. We were there again today, came back down, not as big of a pop-up. By the way, for those of you who are interested, the VIX channels like crazy. So it can be a fun index to trade, and yes, you can trade it. It's available in options, and you can also trade futures on the VIX. So it's something to check out if you're so inclined. However, what we're looking at here is we're trying to determine, well, are investors, is this additional clarity from the Fed creating confidence amongst investors, or at least clarity that their forecasting is going to be more effective in the near term, that volatility may begin to decline. Not necessarily that the market is going to break, the stock market is going to break out excessively to the upside or anything, but is it going to become easier to manage? Well, how does that impact Forex traders? Well, it impacts us a couple of ways. First, we can look at some very specific examples, like the dollar yen, so for example, the dollar yen certainly wasn't hurt by a strengthening dollar today based on Bernanke's comments, but the dollar yen over the intermediate term will also respond to investors' risk sentiment. So the dollar yen will begin to rise when on a weak yen, when investors are moving into higher risk assets. One of those high risk assets would be short yen positions So leveraging a low yield currency against a higher yield investment opportunities, essentially the carry trade. And this is one of those places in which if the VIX does hit resistance at this point, which is there now, and begin to peel off and start heading back down below 21, this is and heading towards 13 or lower. This is where we would see big moves in the forex very specifically. We can also, and I bring this up because I mentioned it yesterday as well. The same thing with the dollar franc. Both in both cases, we're seeing the strengthening, certainly helped by a strengthening dollar. But in the intermediate term, we're going to see if the risk environment begins to become even more under control, and if trader confidence begins to rise, both the dollar franc and the dollar yen, we would expect both of them to rise. But there's another place that this actually plays out. So when investors start to become really confident, you'll start to see existing trends become a lot more durable, and they kind of continue. It's a continuation signal of the existing trend. Well, that points us at a couple of things. Not only these new trends on the dollar yen, dollar franc, but even commodity currencies such as that have been on such a tear, such as the Aussie dollar. So we had the breakout mid-month last month. We've got a little bit of a pullback coming back down to the 38.2% retracement level here that I've drawn on the most recent rally, which is so it's an important support level. Is the market going to bounce here? These are the kinds of things that the takeaway from today's presentation is, well, how do we start to use the information that's available in the Forex to start to forecast a bias for the intermediate term or for the near future? Well, we start to look at those indicators that are available that give us some insight into how traders perceive the market and how they're responding to it. What do they think about it? The VIX is a great way to start to measure that investor sentiment. And although it's based on equity options or stock options, well, in fact, specifically it's based on stock index options, that sentiment is applicable to other capital markets, including the Forex. So we start to look for that important signal to give us an idea as to whether this volatility we're experiencing here is going to continue. If the VIX breaks out to the upside, we would expect things like the Aussie dollar potentially to continue declining. Or is the VIX going to start to drop, which could drive most of or a lot of the Forex pairs, particularly those that have some fundamental weight behind their trends, like the Aussie dollar is a perfect example, to reemerge in their existing trend, which in this case is clearly to the upside. So it's a tool that we use for planning, and I thought it would be a good subject for today to wrap up the discussion from yesterday as to how do we use that kind of tool, and particularly after the comments made by Bernanke, and once this whole thing has had a chance to season this week, what specifically would we be looking at on the VIX to try and make decisions about our planning and bias in the future in the Forex?
This video is brought to you by FXCM. Open a $50,000 practice trading account by clicking the link below.